wanted to talk with you today about rising interest rates. So it's no secret that we've experienced some of the lowest mortgage interest rates in a lifetime recently. And they are still fairly affordable. They have gone up some since they hit the bottom, but they're still extremely affordable. When I started my real estate career, just to put it into perspective, in the mid to late 80s, it was common to see interest rates 12–15% for a mortgage. So to be able to get a mortgage interest rate now in the range of 5% or so is still very affordable. But there's no doubt that they are on the rise. And I think we can all understand that that means that it limits the buyer's buying power, but I'm not sure everybody always understands by how much. And I did recently write a blog post on this in which I used the example of a home buyer that was shopping in about the $200,000 price point. And when the interest rates went up 1%, it did change the monthly mortgage payment to the tune of about between $115 and $120 a month, which doesn't seem like that much. $120 a month, okay, we could probably find that money. What it does impact, however, was the buyer's debt to income ratios. And in my example, I imagined that made the difference between this buyer being able to purchase that $200,000 house or not. And if she still was going to qualify for a mortgage with that debt to income ratio, it lowered her down $16,000 in buying power, putting her at about $184,000 purchase price. Now, $120 a month may not be a big deal, but $16,000 is a big deal. So from the buyer's point of view, what to do is to lock in those interest rates. And if you are borderline, to make a decision in your purchasing now, because it will impact your buying power. But I don't think the home sellers always consider what this means to them. When our buyers can't afford as much, that means our pool is smaller, and that means you are less likely to reap the highest amount possible in the sale of your home. So a word to the wise for the home sellers right now: if you have been balking at a price reduction, or if you were considering putting your home on the market and feeling out a high price, now is not the time to do that. Quite frankly, it really never is the time to do that if you want to know my true opinion. But it's foolish right now to do so, because these buyers have the ability to buy now much more than they will when the interest rates assuredly rise. And, based on all economic predictors, that's sooner than later. So buyers, lock in your rates, make your decisions soon if it impacts you significantly. Sellers, rethink your pricing strategy. Be realistic. No one wants you to give your home away, but price it within fair market value, and let those buyers that are out there shopping now have a fair opportunity to pay you what it's really worth. I hope this has helped. For more tips and information, feel free to visit my blog at LesleyLambert.com.